Good morning everybody, and this is your S&P 500 day trade setups for today. So we did get the move down yesterday as expected, not much. We basically moved to the next level, which was 300 points. We do have a level just below, and this is a very interesting situation that we have here at the moment because that 8-hour bar there, we could argue that it closed on the level, or we could argue that it closed just below it. So 50-50 call there. And if you look to the left, you can see there's no other structure that we need to be paying attention to. So the next bit of structure is a little bit further down. And you can see, what was this, 2 weeks ago, we definitely didn't close on that or bounce off it. We closed below it. So that is still a target as far as I'm concerned. And then obviously we have this potential double top. This would be the neckline of the double top. But have a look at the oscillators now. They have eased off quite substantially, and one of them is starting to cross over. We do have data coming out today. It is the end of the month as well. So, and remember, monthly bars very rarely close without a tail. At the moment, we've got a fairly solid range bar. Have a look at the monthly oscillators starting to cross over on the faster moving oscillator, slow moving oscillator, just pointing to the upside. So this is poised as a flag right now, but it is monthly, so it could take a couple of months before it actually breaks out of that. Let's just get down to the levels we're interested in today. So we had the bounce off, move down to the next bit of structure, and there is a little bit of structure lower down, as you can see over there, which we did bounce off. Oscillators grip the downside now, pointing to the upside. Could be setting up for a move up, but there's just way too much data coming out today and tomorrow, and we've got non-farm payrolls tomorrow. So this is the wait and see game at the moment. It's fairly clear, and the longer this goes on, the less likely we're going to see a Christmas rally. Normally December is one of the strongest months on the stock markets, but for now that is looking a little bit shaky. So let's just work through the hour. Big move down. It was on Monday. We had the gap down, big move down. We're looking for a retest of structure. Didn't quite get the retest here, but if you just widen your horizon a bit and you look to the left and you see where is the next logical area, you can see basically two. We had two zones, possibly three, which is why I always try to put the three levels in. There's my three levels there, and see what happens with price. And you can see the first one was the one that we took out. So there was your confirmation bar. Many ways to play it. Wait for a bit of a pullback down, or alternatively just jump in at the break of this bar with a stop up here. You could have also just jumped in on one of these levels here with a stop high up here, but that basically means you have a fairly large stop loss. So that's a 389 point stop loss, and you would have been looking for one of these levels. So it kind of would be a bit risky. It wasn't even a one-to-one trade that. Anyway, that is what transpired, and normally if you just pay attention to the 50-minute, there you can see an attempt at a piercing pattern, which is a fairly strong bullish pattern. Look at the oscillator, sorry, bearish pattern, and there is the oscillators grip the upside, and here you can see a bit of a range bar, inside bar. So not quite on a level, which would have been a little bit irritating, but you do have three levels, so something along the lines of that. So that would have been 112 point stop loss, and you would have been looking for at least this first level. But look how we shot through the first level, so then second level would have been profit. So that would have been a 3-to-1 trade. Anyway, for today, bearing in mind you do have data coming out, it is looking like another pullback onto structure and then a bounce off. So that would be the area there. Just going to delete that. I'm going to leave that level in because I think that is going to be tested soon enough. And then what I would also do is just put that trend line in. Bit of a mess, but you can see there it is. There's been quite a few touches on that. So again, this is the area I'd be paying attention to. and I want to use this one because there's a small little level in between here, which is up there. So you can see we've got a moving average crossover. We've got all three moving average crossovers. So that is now bearish territory. What's going to turn this bullish is basically a break above 39.89. So I'm looking for a rejection of 39.72, or if it squirts up really early in the morning, 39.78. Looking for a short there, and I am targeting 39.50 again. And if we get through 39.50, then I'm looking at 39.21. That's kind of the view that I've got at the moment. You can see the oscillator is rapidly moving to the upside. And this is a 15-minute trade. Just bear in mind, on the 8-hour, the trend is up. So these little shorts that we're talking about now is not indicating we're falling to the floor. We are just looking for support. Okay, we're going against the 8-hour trend, but we are going with the 1-hour trend. So 1-hour trend is confirmed as down. I'm looking for another leg down. Okay, so yeah, and as I said, 15 minutes is the way to go. If you've got lots of time, then your 5-minute chart will actually be just as good. And I'll show you that quickly. You can see on the 5-minute chart, look there, nice rejection, exhaustion bar up onto this level, we broke through it, exhaustion level, then an inside bar, nice tight stop loss. There's your entry, there's your stop loss, 50 points and 300-point gain. So doesn't always work out, but when you're in a trend and you've got the 5-minute trend and the 15-minute trend and the 1-hour trend looking in the same direction, it normally always works out. Okay, so that is kind of my view today. Just look for, so long as we stay below the 155 on the 15 minutes, that is the trend line. I'd expect us to continue falling. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.